We can tell you at this point, and this is based on conversations with people familiar with the continued situation there, if you want to call it that it does seem highly unlikely at this point that Comcast is going to counter the $38 a share cash and stock deal that Disney has to acquire those Fox assets that we've been talking about now for many, many months. It's not completely clear, but it is, again, highly unlikely, I think, is the right way to sort of term what the view is from the Comcast camp at this point, as a number of things have sort of given them pause in recent weeks. In fact, including the decision by the government to appeal Time Warner AT&T. Why? Well, only because it would give pause to the Fox board yet again. But even beyond that, the continued belief that Rupert Murdoch in some way would favor a Disney bid. The idea that even were Comcast to come back in the low 40s, let's call it 41 or something like that, that it might still not be enough to actually get them the prize they sought, and the belief that Disney would counter to the extent it needed to. The timing advantage that Disney has on antitrust as well. You put it all together, and the belief, I think it's fair to say, in the Comcast camp is that you would have had to go to such a high number that it would not have been a responsible thing for Comcast to have done. And therefore, I think it's fair to say at this point it is certainly seen as highly unlikely that Comcast will come back with another bid to counter again that $38 a share deal that Disney has in place to acquire those Fox assets. Now, not so, of course, when it comes to Sky, the satellite business that Fox currently owns 39% of, that Comcast currently has a recommended deal from the board, at least of Sky, at $14.75 for. In fact, as you might expect, Comcast now much more, if not solely, focused on winning that battle. And it is in light of that as well that I would note an 8K that was filed fairly late on Friday. Timing-wise, well, it only was done not to hide, but simply because the Comcast bid didn't come through until Thursday. But it is worth noting something that was not in previous filings from Disney and its partner Fox when it comes to Sky. And the language is as follows. In the 8K, about 6 pages long, it says 21st Century Fox may elect not to increase the price offered by it in the Sky acquisition. And any increase in the debt financing for the Sky acquisition would require Disney's consent, which Disney may elect not to provide. Do we have that second part there, guys? Move it ahead. We're stuck. So listen to me. Which Disney may elect not to provide. And so that language was not in previous filings. You can view it any way you want. Of course, it doesn't necessarily mean that Disney and his partner Fox will not choose to compete here with that $14.75 price. But it does, for the first time in a filing at least, give us the possibility that Disney and Fox will choose not to. And so we are now left, it would seem, with Comcast much more, if not solely, focused on winning the Sky assets, as I've said, because it is highly unlikely. And by the way, they would have had to have made a bid, let's call it by the end of this week, at the latest, given the July 27th Fox shareholder meeting, the opinions that are going to come in from the likes of ISS and other proxy advisory services. And then there's also this, which is, and I noted this research piece from Todd Younger at Bernstein late last week, which is some danger they see for Disney as well, in that buying both of these assets and adding as much leverage as Disney would to its own balance sheet would, in the opinion of the analyst Todd Younger, he says, we struggle to see how Disney can simultaneously make this sustained investment while also deleveraging, even in a stable macro environment. We fear they will either underinvest in the direct-to-consumer product or fail to delever. And again, we got a little screw up in the old control room with some of our chyrons, but important to know. So that's where things stand.
That's very interesting because there's still, I'd say, a plethora of research that expected a higher bid from Comcast. I did not, but that's because I listened to your reporting. I think that this is going to cause a revaluation of both stocks. because there had been, if you just go back in time, not that long ago, there had been this expectation, Comcast will come back, Comcast will come back. I can go back to tape, literally, to hear maybe a half dozen analysts who said this thing is not over. So that's why Comcast has been radically revised, up 10% now, and I don't think it's done if you tell me that the leverage isn't so great that they can't buy back stock at the same time.
Right. Well, you'd have to figure out Sky. Let's assume Sky ends here at $14.75 and Disney and Fox choose not to necessarily compete. By the way, don't expect anything on the record from any of these companies. UK takeover law, for example, were Disney and Fox to say anything more than they've said in this 8K, they would be beholden to it. That would prevent them perhaps from having to have that opportunity to counter for Sky should Comcast, in the highly unlikely event, choose to compete for those Fox assets. So this is kind of where you're going to be until we get most likely that shareholder vote. By the way, on the Sky front, we'll also see under UK takeover law, they've got some time still on the Fox side to make their filing for their bid, and then the clock would start to get you to an official auction under UK takeover rules. But again, it does appear at this point, certainly, that Comcast has really backed off completely on Fox assets and is solely focused, if not very much focused, let's say, on Sky. And Disney, for its part, telling us for the first time that at least it may not elect to provide its consent for Fox to go higher in the bid.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.